Minister Jap made a video the other day talking about Bitcoin, and he absolutely has no idea what he's talking about. Now, I get it. He was trying to make a joke and reference Bitcoin to women, but still, don't come on here talking about things when you don't know what you're talking about. So in this video, I'm going to cover some of the questions he had about Bitcoin, and I want you to fact check everything that I'm saying in this video. Don't take my word for it. Take this video, go on the internet, and do your due diligence, because see, that's the problem with this black sector, is that because these guys are entertaining and they're funny, a lot of you just sit there and take what they say at face value. No, if they're trying to talk to you about politics, economics, business, currencies, go do your due diligence. Don't just automatically down something, because you could be missing out on the opportunity of a lifetime. Now, the first thing he said was, what is Bitcoin? Bitcoin is a peer-to-peer digital currency that is decentralized. What does that mean? Peer-to-peer means you and I can exchange value, aka send money to one another, without a third party being in the way. That's the decentralization aspect of it digitally. So if you want to send me $10,000 at 4 o'clock in the morning and I'm in Australia and you're here in New York City, you can do that even if the bank is closed. You don't have to worry about it taking 2 or 3 days for the bank to send it, to confirm it and make sure no fraud is going on. Simply, you can send the money wherever, whenever. All you need is the other person's Bitcoin address. Simple. The next question was, what makes Bitcoin valuable? What is it backed by? Well, it's backed by digital scarcity. There will never be more than 21 million Bitcoin ever. You can't just print Bitcoin. It's baked into the code. Once 21 million Bitcoin are in existence, that's it. It's a cap. So it's supply and demand is what creates a market. Look at Yeezys. Why are Yeezys so valuable? Because of supply and demand. There's a limited amount of supply and a huge demand, which does what? Push price up. Now, when you look at Bitcoin, it's estimated that about a third of all Bitcoin that is in existence today is lost, meaning that people lost their passwords. Because Bitcoin is decentralized, you can't go and email support and say, hey, I lost my password. You lose your password, you lose your Bitcoin. So now that does two things for Bitcoin. Let's extrapolate that, right? We know that there will only be 21 million Bitcoin. So that means by the time we get to 21 million, at minimum, 7 million of those Bitcoin are going to be lost forever. Number one, it puts an artificial floor underneath Bitcoin. Bitcoin can never go to zero because you can't sell the Bitcoin if you can't get access to it to even put it on an exchange to sell it. So Bitcoin can never go to zero. The next thing you need to understand about that is that because people are losing their Bitcoin, that makes the ones that are in circulation even more valuable. So if you have 1 million of the 14 million Bitcoin that will be in existence because of the ones that are lost, it's like a collector's item, supply and demand. Because we know eventually, as the network keeps growing and the blockchain keeps growing, every time people are doing transactions, eventually we're going to get to 21 million Bitcoins. Also, what creates value for Bitcoin? Well, let's compare it to gold. What makes gold valuable? The fact of supply and demand. You can't print more of it. Well, I just proved to you, you can't print more Bitcoin. Also, how do you find the gold? You have to go out and get equipment and get permits and get contractors and workers to do what? Dig in the ground and find the gold, right? You mean you have to spend real world resources to get the gold. Well, guess what you have to do with Bitcoin? You have to spend real world resources to mine and solve complex mathematical problems with your graphics processor, right? Because it's very complex. It requires a lot of computing power. So I have to go and do what? Buy GPUs, which are expensive, because the more and more people who want to get into Bitcoin, guess what they do? It becomes less and less graphics cards on the market, which pushes the price up. And then I have to use my electricity, my power, to power my computer. So I'm spending real world resources to mine the cryptocurrency and secure the network. And because I find value in it and I want to use it, that makes it valuable. Now, let's compare Bitcoin to gold. If you had $100,000 worth of gold and gold bars, and you wanted to send that to a person in Australia, what would you have to do? You would have to, one, trust that you're going to give that much gold to someone and that they're going to actually ship it there. And how long do you think it's going to take for it to get there? Well, with Bitcoin, all I need is my little thumb drive. right? If I wanted to move to Australia, I don't have to worry about somebody shipping it. I don't have to worry about insuring it and backing it up. I could put my Bitcoin right on this thumb drive, and just like that, I can have 100,000, 200,000, 300,000 off of a Bitcoin on what is known as a nano ledger. Now, some of you are going to say, oh, but what if you lose it? You can back up your ledger with a 15-phrase seed password. Very simple. So I can take this money with me anywhere in the world. And even if I lose my USB, I can back it up and then go get another new ledger and do the same thing. With gold, this is why people did not like gold, because gold is suspect to, it's hard to exchange value easily. If you're doing big transactions and you want to transfer 100,000, 200,000 for gold, that's going to be extremely hard to do. Now you got to think about, what if somebody's in a cave or mining somewhere in the Middle East and they find a huge supply of gold? Then guess what happens? If they find more supply of gold, guess what happens to the value of gold? More supply means that the value goes down. Now, you talked about Bitcoin crashing. You know, you buy something, you don't understand it, and it crashes. What has gold did? I'm looking at a chart of gold right now. The high for gold was $1,900, and that was back in 2011. You know what gold has done since 2011? It's done nothing but move sideways. It's sitting at right now $1,312. So what about those people who bought gold in 2011? They're losing money. Now let's look at something like Bitcoin. Everybody keeps talking about, oh, Bitcoin crashed from 20,000 all the way down to 4,000. But they're not looking at the fact that it went from $1 to 100, 100 back down to 10, from 10 to 500, from 500 down to 2, from 2 up to 1,000, back down to 5, from 1,000 to 4,000, all the way up to 20K. And guess what's going to happen as the network continues to grow and the network effect grows and more people start to adopt it? Guess what's going to happen to the price of Bitcoin? It's going to skyrocket because of supply and demand. So we can play the same game that you're talking about Bitcoin crashing. We can talk about gold crashing. So we can play this game back and forth. See, it's a reason why the United States got off of the gold standard. And it's not a conspiracy theory. When we were using the Bretton Woods system, the problem with gold was that rich people do not spend money. They hoard it. So if it's backed by gold and all of the rich people are holding on to the money because they're not going to buy a new iPhone every year, they're not going to buy a new car every 3 years, the economy starts to slow down. So they designed a mechanism to force people to spend money, which is known as inflation. I'm not here to say it's good or bad. I'm here to educate you, because if rich people don't spend money, that means money stops circulating. If money stops circulating and flowing, the economy begins to contract and slow down. Poor people, they'll spend money. They'll go into debt to spend money. So inflation forces rich people to constantly have to spend money today because they need to recoup what they're going to lose in inflation the following year. Again, I'm not here to say it's right or wrong. I'm educating you on why we got off of the gold standard. And also, because you have a fixed amount of gold, that means your economy is fixed. It can't grow beyond the supply of gold you have, which then is going to lead you to have to borrow money. So it was problems with gold, which is why we got off the gold standard. So the same way you think that gold is valuable, Bitcoin can be valuable. The difference is there will never be more than 21 million Bitcoin. Then you try to say Bitcoin is a Ponzi scheme, which is a joke. A Ponzi scheme means that I'm taking money from new investors to pay old investors. I just told you Bitcoin is a peer-to-peer digital currency. We are exchanging value. When I get paid for my clients, I tell them to pay me in Bitcoin. So I'm spending a resource, my time, my skill, my labor, and they're paying me in a currency that I find valuable. You may not find it valuable. That's what makes a market. You believe it should go down. I believe it should go up. Supply and demand. Now, let's really dive deeper into that so we can begin to really understand. When you look at something like crude oil, there are some people who speculate on the price like me. I trade crude oil futures. And then there are people who use crude oil every day for their car, to build things, to manufacture things. People need oil. So you see how on one end, it's an exchange. People are using it. And on the other end, people are speculating on it. It's the same thing with Bitcoin. The reason why people are willing to invest in it is because they believe in 2 years, 3 years, 4 years, 5 years, when we finally get to 10 million, 20 million, 21 million Bitcoin, the value is going to go up because of what? Supply in demand, because we know there will never be more than 21 million Bitcoin. So yes, there are some people who are investing in it looking for the price to go up. They're speculating, nothing wrong with that. And then there are people like me who transact in Bitcoin because I don't want the government taking my money. I don't want to pay money in taxes. So I do business in Bitcoin. And there's a lot of people like me who want to get around the tax system and not have to pay taxes on money. So we conduct business in Bitcoin and transfer it into Monero, which is a currency that you can't trace. Now there's all type of different cryptocurrencies. Bitcoin's just one. But you have to understand Bitcoin is the network effect. Think about MySpace. Obviously, in the future, technology always improves. We don't know what may be the king of the hill. It may be Cardano. It may be Ethereum. It may be Nulls. It may be Steam. It may be VeChain. There's literally thousands of cryptocurrencies we don't know. But what we do know is Bitcoin is branded, and it's going to take a lot of work before you can overthrow Bitcoin. So this is why people are willing to invest in Bitcoin. It's sort of like the OG, because MySpace had a very long run before Facebook came, and then Pinterest came, and then Snapchat came, and then Instagram came, right? And there will always be something new, but still understand that Bitcoin is the original. Now, does Bitcoin have flaws? Absolutely. What system and what currency doesn't have flaws? The US dollar has flaws. You don't know how much is in supply. If the Fed wants to raise interest rates, you have no say in it. And Bitcoin, the more Bitcoin you own, the more say you have in the network, in the block size, and the transaction time. So there's a lot of technical things that I can go into, but I wanted to keep this simple. Bitcoin is a database that people want to participate in and exchange value, so that it's decentralized where we can see everything that's happening in the network. We don't have to worry about some third party behind the scenes doing things that we don't want to know, that we want to know that we don't know. For example, your bank. You don't know what your bank does with your money. You just trust the fact that your bank is insured by the FDIC. We don't know what the banks do with our money. We know that they do fractional reserve lending. At least with Bitcoin, we know they can't print more of it. And we can look on the actual blockchain and look at the ledger and see all of the transactions happening. So again, I don't want to dive too deep in it. I wanted to keep this video simple, but it's a problem when you speak on things that you don't know what you're talking about. Bitcoin is backed by something. It's backed by the same thing that gold is backed by: resources, transactions. And you don't think it's valuable, but I do, which is what creates a market. Now, what's going to happen to many of you black people is because many of our people are ignorant and we don't do research, we're going to miss out on the next wave. And when Bitcoin's sitting at 100,000, 200,000, and you come trying to run in, many of the people like myself, who's been in Bitcoin since, I've been in the crypto space since 2013, 2014, we're going to dump on you. So when Bitcoin's at $200,000, $300,000 a coin, and you come wanting to get involved and you only can buy little fractions of it, I'm going to be selling my Bitcoin to you, cashing out of the market if I want to cash out into fiat. See, you buy assets when they're low and you sell high. That's the name of the game. When everybody else is trashing something is when you want to buy. And I'm going to leave you with this. This is not financial advice, but it's my opinion, and it's a strong opinion. If you are poor, do not buy cryptocurrency. Bitcoin's not for you. If you have $5,000, $10,000, $15,000 and you're looking to get an asset, I would recommend you put your money in real estate. Why real estate? Because it's a proven asset class. Bitcoin, you're right, it is not proven as far as which one's going to be more tangible. Because if you go to a bank, you can get a mortgage to buy a house. You cannot get a mortgage to buy crypto. So you take that $15,000, $20,000 you have, you go and you buy you a house. Now you have collateral. Now you can begin to start using the cash flow plus the actual hard asset, and you can leverage that to get more capital, to get more loans. And then you can take $5,000 or $10,000 and speculate into different things after you secure yourself with something that's much more, it's much more predictable, right? The Bitcoin market is volatile. It can go up 100% today and crash 200% tomorrow. That's just the way markets move because it's establishing itself. And people are speculating, and some people want to cash out and some people want to get in. And understand, because the market is new, there will be a lot of manipulation. But I'm in this for the long run because I was playing around with Cardano, Substratum, and Ethereum, put 10,000 in there and made over $250,000 playing around in cryptocurrency. So understand, I'm passionate about this type of stuff because I understand if you know how to leverage yourself properly, you can make some real money. But again, I recommend starting with real estate. Get a business, take the cash flow from that, and then invest in things that you want to speculate on. Or if you have a service or a YouTube channel, don't take all your money in dollars. Have people donate to you in cryptocurrency so you can get some exposure. Again, I don't want to ramble on too long. I want to leave this right here. And please, people, for those of you who are educated in crypto, don't come in a video and start trying to, nitpick at different things and, oh, you didn't say this, you didn't say that. I wanted to keep the video simple just to cover some of the things he said in the video. Now, a link to his video will be in the description below. So you can like this video, subscribe to my channel, and please share this video.